This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everyone. It is a busy Thursday afternoon. Carol Massar, Tim Stenovec, live here at Bloomberg headquarters in New York City. We've got stocks up. We've got earnings to talk about. A lot, in fact, to get to, including this ceasefire between Israel and Lebanon. At least this is a 10-day ceasefire. But in the meantime, we've got the president making some comments.
Yeah, he's at the White House. Let's listen in as he heads to Las Vegas.
The fighting resume, Mr. President?
I would say the fighting, if there's no deal, fighting resume.
Okay, and then on gas prices, how much longer will Americans continue to see these high gas prices?
Well, they're not very high. If you look at what they were supposed to be in order to get rid of a nuclear weapon with the danger that entails. So the gas prices have come down very much over the last 3-4 days. I know, that's what ABC says. But the fact is that if you look at the stock market's up, everything's doing really well. And the big thing we have to do is we have to make sure that Iran does not have a nuclear weapon, because if they do, you want to talk about problems, you'd have problems. So very important is that Iran does not have a nuclear weapon, and they've agreed to that. Iran's agreed to that, and they've agreed to it very powerfully. They've agreed to give us back the nuclear dust that's way underground because of the attack we made with the B-2 bomber. So we have a lot of agreement with Iran, and I think something's going to happen very positive. Very complicated subject. It's. I don't think we're waiting. I think we're moving very fast. It could happen pretty quickly. Say it.
How long you could sustain the blockade on the Strait of Hormuz?
The what?
How long you could keep the blockade on the Strait of Hormuz?
We're doing very well with the blockade. It's very routine for us. The Navy is incredible. And I think the blockade is doing very well. It's no ship is even thinking about entering. No ship is going past our Navy.
Why are you fighting with the Pope? And are you worried it's upsetting your...
No, I don't. I have to do what's right. The Pope has to understand that. Very simple. I have nothing against the Pope. His brother's MAGA all the way. I like his brother, Louis. I'm not fighting with him. The Pope made a statement. He says Iran can have a nuclear weapon. I say Iran cannot have a nuclear weapon. And if the Pope looked at the 42,000 people that were killed over the last 2 or 3 months as a protester with no weapons, no nothing, I mean, you take a look at that. So I can disagree with the Pope. I have a right to disagree. I have a right to disagree with the Pope.
What do you say to people who see that, who see your criticism of the...
Look, nothing. I have no disagreement with the fact the Pope can say what he wants, and I want him to say what he wants, but I can disagree. I think that Iran cannot have a nuclear weapon. If they do, the whole world would be at jeopardy. The Middle East will be blown up, and the whole world will be at jeopardy. We're very close to making a deal. That'll be a great thing. The Pope has to understand, Iran has killed more than 42,000 people over the last few months. Think of it, protesters, without guns, without anything. They were totally unarmed protesters. The Pope has to understand that. This is the real world. It's a nasty world. But as far as the Pope and saying what he wants, he can do that. Now, I know the Pope's brother. He is a big MAGA person. He's got MAGA all over his house. His name is Louis. He's actually a great guy. And I'm sure the Pope is a great guy. I haven't met him. But I disagree with the Pope. If the Pope would allow Iran to have a nuclear weapon, you can't do that.
There are people that are saying that the Pope is not...
Anthony Mershak from MTV.
No, not really.
Anthony Mershak from MTV Lebanon.
What?
Anthony Mershak from MTV Lebanon. I would like to ask you regarding congratulations for the 10th war.
Yeah, it's very exciting. With Lebanon, it's very exciting. I think we're going to have a deal. We're going to have a meeting, first time in 44 years. And Lebanon will be meeting with Israel, and they're probably going to do it at the White House.
When do you think, President, when do you think they will...
Over the next week or two.
Or the next week. And do you think this agreement can reach...
I do. I think we're going to... I think we will have an agreement between Lebanon, and they're going to take care of Hezbollah. but they're going to be working on Hezbollah right now. But we'll have an agreement between Israel, very importantly, and Lebanon.
Will you support our Lebanese army as well in
I would, yeah.
Iran's going to execute.
Has Hezbollah agreed to this ceasefire? I mean, how do you even?
They're all agreeing. It's a very nice little package for about a week, and we're not going to have lots of bombs dropping, and we're going to see if we can make peace between Lebanon and Israel.
And this one more on the Pope, Mr. President, because there was a group of bishops that did put out a statement saying the Pope isn't merely exercising his opinion, he's preaching the gospel. I mean, what do you say to people that do this?
Well, I want him to preach the gospel. I'm all about the gospel, but I also know that you cannot let a certain country, which is a very mean-spirited country, have a nuclear weapon. If they did, they would use it, and I think they'd use it quickly, and they would kill many millions of people. So, you know, the Pope could disagree with me on that, but certainly we're allowed to have that. I'm all about the gospel. I'm about it as much as anybody can be, but I can't allow, as President of the United States of America, I can't allow Iran to have a nuclear weapon. And here's the story. They won't have. They've already agreed not to have. That's good news, and I think the Pope will be very happy.
Iran's going to execute 4 more people, including a woman.
The Federal Reserve should wait and see about this Iran war before lowering interest rates. Do you agree with that?
No, I don't agree. I think we should have lower interest rates.
Iran's going to execute 4 more protesters, reportedly, including the first woman protester. What do you tell Iran?
Well, tell that to the Pope. What did you say? Tell that to the Pope.
You want to patch things up with the Pope?
That Iran is going to...
Lebanese people love you so.
Did you just hear that? Iran is going to execute 4 people, including a woman?
The Lebanese love you so much. Will you visit Lebanon?
Do you extend the ceasefire? What makes you extend that?
I don't know if we're going to have to, but if we need to, I would do that.
Wait, that's important. Sorry.
What are you telling the airlines and the oil companies about the way you're going to open up the trade?
So if you look at the oil and if you look at the price we're paying, it's about half what people thought it would be if you did what I had to do. We had to take this journey to the Middle East in order to get rid of a nuclear weapon. There would have been, if we didn't hit them with the B-2 bombers, or if I didn't kill the Barack Hussein-Obama deal, the nuclear deal, which was a disaster, we would have had nuclear weapons exploding in the Middle East and beyond. I believe I've been able to stop that. I think we have a very successful negotiation going on right now, and I think it'll be, if it happens, it'll be announced fairly soon, and that'll give us free oil, free Hormuz Strait, everything will be nice, and I think your oil price will go down to lower than what it was before, and I think a lot of good things will happen.
Just for clarity, you're willing to extend the ceasefire?
Well, we'll see. I don't know that we'll have to. Ideally, we'll, but if I needed to, I would.
The Lebanese people love you so much. What do you say? The Lebanese people love you so much. What's your message for them? And you will visit Lebanon after this deal?
I will do that. At the right time, I would certainly go there.
You think this war in Ukraine, Putin doesn't want to stop it apparently. He keeps bombing Ukraine. Do you think this war has the potential to go on for years more?
Well, it should have never started. If I were president, the war in Ukraine never would have started with Russia. But it's going on. Hopefully it'll get over soon.
The First Lady came out last week and said she had no link to Jeffrey Epstein.
Who did?
The First Lady, Melania.
She had none.
Why did she come out and say that last week?
Because the fake news was saying she did, and she had none, and I think that's been proven. It bothered her that the fake news was being fake news. That's all. She just wanted to clarify.
Were you surprised?
Who's taking care of Hezbollah? Do you think that they are destroying the deal that we are trying to make?
We're going to see how it all works out, but they'll be working and coordinating. If you know Lebanon, right? So they'll be working with Hezbollah.
If we fire Jay Powell,
interested in acquiring Iranian oil?
What?
Are you still interested in acquiring Iranian oil?
Well, we'll see. I mean, we have a very good relationship with Iran right now, as hard as it is to believe. And I think it's a combination of about 4 weeks of bombing and a very powerful blockade. The blockade is maybe more powerful than the bombing, if you want to know the truth.
Are you going to make the Arab countries pay a portion of all of the costs?
I think they'll make that. I think they're going to make that contribution. I think the Arab countries, because we've done a lot, I think they'd make a contribution toward the cost. Not been involved.
Iranian assets without any conditions if you make a deal?
We're going to see what happens, but I think we're very close to making a deal with Iran. You'll be the first to know, but I think we have a chance. And if that happens, oil goes way down, prices go way down, inflation goes way down, and you're going to have, much more importantly than even that, you won't have nuclear holocaust.
All right, everybody. You have been listening to President Trump live there on the lawn of the White House. He is headed to Vegas for a roundtable on taxes. But what's of note, certainly to the Bloomberg audience, Carol Massar, Tim Stenovec, live here at headquarters for Bloomberg, talking a lot about the war and saying, the president that is, that Iran willing to do things that they weren't 2 months ago, looking very good, will make a deal with Iran, and says the next meeting with Iran may be over the weekend. But he did kind of make the statement that they have a lot of agreement with Iran at this point.
The president, though, also saying if no deal, fighting will resume. He said also we're doing very well with the blockade. The president, too, reiterated that Iran cannot have a nuclear weapon. And I think, Carol, a lot of the tone in today's trade is about what happens between Lebanon and Israel. As you mentioned, the president did say that we will have an agreement between Lebanon and Israel, and they might. He said Lebanon and Israel will meet at the White House in the next week or two.
Benjamin Netanyahu also weighing in, or maybe this is the president on Mr. Netanyahu. No, I guess it's Benjamin Netanyahu saying that President Trump, also determined to end the Iran nuclear threat. So we're getting some headlines from him as well. The president also saying he's looking forward to being in China and that he has a special relationship with President Xi. That U.S.-China relationship, so key, the two largest economies, we know, very, very important. All right, welcome, everyone. We've got a jam-packed hour here on Bloomberg Businessweek Daily coming your way on a day where we've got markets up once again, little change on the S&P 500, but continue to trade at record territories. We're going to talk with the Schwab CEO, Rick Wurster. He'll be along in just a moment, but we've got a really terrific guest to get you going in this hour. Yeah,
we're talking about the European Securities and Markets Authority. It's the regulatory watchdog for financial markets and investor protection. ESMA, it's less centralized than the SEC. It's not exactly the European version of the SEC. It relies more heavily on national regulators. Bloomberg reported out late last year it's been strengthening its powers to become a more direct, unified supervisor. We are so delighted to have with us Verena Ross. She is chair of the European Securities and Market Authorities. Verena, so nice to have you here with us.
Thank you very much.
A lot coming at us. I guess I have to ask you, macro, coming off of, again, comments from President Trump. This is our world at this point, certainly here in the U.S. What is the view from your vantage point when it comes to what comes out of the United States, specifically this administration, on geopolitics, actions in general that can change from day to day, week to week?
Thank you very much for having me. Now, obviously, we are, as a market supervisor, we are very closely monitoring what's going on in the market. We've seen enhanced volatility over the last few weeks, given all the geopolitical events. And that has clearly created also quite a lot of uncertainty, both in the short term, because it's very reactive to whatever the latest news is, but also in the medium and long term, what the implications for economies, for companies will be coming out of some of the macroeconomic consequences of the war and the tensions in the Middle East.
But despite the volatility, everything has worked as it's supposed to.
So that is, I think, the positive news is that we've actually seen significant volumes go through, but in a very orderly way. Market infrastructure has been shown to be very resilient.
Almost remarkably so, right?
It has been really stable and orderly. At the same time, I think what we shouldn't underestimate is that it means that we see significant volatility and uncertainty. And I think that, combined with potential longer-term underlying risks, such as operational risk, cyber risk, or also underlying issues in private credit markets and so on, if there were events which were coming together that could really be quite impactful. And I think that's what we are monitoring for. And in particular, from our vantage point, it's obviously the impact that will have on the broader market, how it would actually flow through into the wider financial system.
Ross, I'm so glad you went to private credit. Earlier this year, I feel like, that was one of our major narratives, certainly, along with AI and a few other things. Obviously, geopolitics has now become front and center again. Earlier this year, you weighed in in on private credit, and you said you were trying to ease the cost and effort required for hedge funds and private credit firms to comply with new rules, which will require them to hand over more data to authorities. What kind of update can you share on that? How is that going, and how important do you think that is to having a productive but still profitable market for investors?
No, that is a very live debate, particularly in the European Union, because a lot of our companies require funding where they find difficult to get sometimes from the banks. So they're looking at wider funding sources, and clearly private equity, private credit, some of the venture capital are important funding sources, which are still very small in the European Union at the moment compared to the US markets. So we believe that variety of funding sources is important. At the same time, we need to be conscious of the potential risks that are there. We need to make sure that we have the right data, the right transparency about what's going on in the markets when it comes, for example, to valuation or liquidity mismatches between some of these longer term assets. But the promise to investors that you can redeem on a daily basis, that creates real questions about how that would work in practice when there's trouble. At the same time, we are also looking at the issues of how to make sure that we understand well the interconnectivity. So who is actually investing in these type of funds and assets?
We're underestimating the interconnectivity of private credit with the establishment in terms of the financial system? Do you think we're underweighting it, the significance and the potential for risk?
I'm sure there are interconnectivities, whether that is into the banking sector, whether that is into the insurance sector. So that is something that is there. I think we are all struggling a bit to know exactly how impactful that will be, because it will also very much depend on the scenario of what is playing out, how that interconnectivity would work and where the potential spread of risks would fall.
You know, we're talking all about risks, and we're going to talk about AI in just a minute. But if we think about all the things that we've just talked about, private credit, we've talked about geopolitical risk, the war, there's this tension no matter where you are in the world between investors and regulators. And there's this narrative that in Europe, the regulatory environment is more challenging for investors and more challenging for companies than it is here in the United States. Is it an easier environment now to regulate in because there are so many risks out there right now, whether it is war, whether it's private credit, whether it is AI? Are businesses more receptive to regulation?
I would say there's the ongoing debate about, what is the right regulatory framework that on the one hand is sufficiently agile and responsive to market developments, which is a real challenge given how fast markets are moving and technology is moving. And on the other hand, making sure that the regulators and supervisors have the right information and the right tools to intervene where it is necessary. Generally, the push at the moment is to let's simplify, let's reduce burden, let's reduce regulatory burden, make sure that we have a regulatory framework that also enables innovation in a kind of well-framed context. So as ESMA, we are very focused on trying to make sure that we also look at how can we actually simplify and decomplexify some of the regulatory framework that we've built over a number of years, make sure we focus on the issues where the highest risks are, and we make sure that we lower some of the burden that we are putting either on companies who need to report or want to list, or on investors who want to engage in capital markets and who actually want quick and easy to understand information to make those decisions.
All right. Speaking of risk or regulatory oversight, got to talk about artificial intelligence. Like, this is our new world, right? Anthropic and its new AI model called, we've been debating, is it Mythos or Mythos? But if you know, folks, let us know. But anyway.
You got to ask the model.
We do have to ask the model. Today, our Bloomberg team reporting out on how Anthropic is planning to release this new model, powerful, and there are concerns about the power for hacking. So you wonder about that in terms of the financial community. But anyway, we are reporting that this model is going to be released to UK financial institutions in the coming weeks, or in the coming week. I'm just curious, what do you see as the implications of this kind of model? They get more and more sophisticated, their abilities. on markets and market infrastructure. And I know we're all kind of finding our way through this.
Yeah, it's very much a developing picture, but what I see clearly is that artificial intelligence is changing the world that we live in, including financial markets. So it is also about making sure that we understand properly the implications, that we try to create some broad guardrails on governance and on how we look at these models and what they can do and how they might impact our core objectives of investor protection, orderly markets, and stable markets.
Is it safe to say, just real quickly, that we don't have a lot of information? We don't totally understand them? Do you guys feel like you understand this new model?
So I certainly have not got any detailed information about that model. I think what I understand is that there is really that possibility that to discover potential weaknesses in cyber defenses and so on. Yeah. That can be obviously an opportunity to help you patch up those cyber defenses, but on the other hand, falling into the wrong hands or being misused, it could also create real vulnerabilities to the financial system.
Yeah, it's a strange new world order. Please come back. We would love the perspective, super valuable with everything that's coming at us. Verena Ross, she is European Securities and Market Authority's chair of ESMA, and joining us right here in our studio.
Hey,
thank you so much.
Thank you.
Let's get to the Bloomberg Businessweek studio. We're going to stay on markets and get on over to Charlie Pellet with an update on today's trade. Hey, Charlie.
Well, hello there, Tim and Carol. We are looking at an update here. In fact, records right now. It's been a choppy day, but to be sure, we do have a record on the S&P. Any advance today will be a new high. Right now, the S&P is at 7,027, up by about 0.1%. The Dow up 0.2. NASDAQ, little change. We've got the NASDAQ 100 index also at a record. 10-year, 4.30%. Crude, West Texas Intermediate up 3.7%, 94.68 a barrel. Briefly, Madison Air Solutions shares up 18% after the company raised $2.23 billion in the biggest U.S. listing of an industrial firm in close to 3 decades. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thank you so much for that update, Charlie. Do appreciate it. Just to remind everybody where we stand on the day today, taking a look at the S&P 500. When after yesterday, Carol, we recovered everything, or earlier this week, I should say, everything on the S&P was recovered from the start of the war back on February 28th. As Charlie said, moderately higher, the S&P up 0.1% right now, the NASDAQ composite up just fractionally right now, the Dow up 0.2%.
All right, so we are watching the trade. We just got a great global perspective from our last guest, which is, kind of really useful considering all the things that are coming at investor. Let's get another view on what is going on, especially in terms of what they are seeing on their platform. Pete Mulmat, Pete Mulmat is head of brokerage at tastytrade, IG&A. Of course, they are the 24/7 trading platform, and he joins us here in studio. Welcome. How are you?
Thanks so much, Carol. Tim,
good to see you.
It's so great to see you guys. I feel like I've known you. We've had a lot of construction in Chicago, and you are my drive home every afternoon. Oh. So to get to sit down and talk with you in person is absolutely incredible.
We'll be sure to disappoint you. So hope your expectations
for yourself
are
there, buddy. No. Good to have you here. Talk to us about the trading activity. We're going to hear from Schwab CEO in just a moment. They had talked about average daily trades, 39% increase in March compared with a year earlier. And I'm just curious what kind of volume and activity you guys are seeing on your platform. What does it tell us about the mind of the retail investor?
And the retail investor is staying very engaged. They're being more selective in the products they choose. They're more involved. They're not out picking single names. They are more involved in the broad-based indices, whether that be Qs, SPY, SPX. The uptake has been tremendous around 0 DTEs. But we're seeing a retail investor that has previously been a consistent dip buyer on this rally to new lifetime highs. And it's interesting, the disconnect. We've baked everything and then some out of this market to the upside in terms of event risk. Crude oil, we were below 90. We're up $3 now. Gold and silver still holding into a chunk of huge gains. Copper near lifetime highs of $6. I think retail's looking at a measured view here of they're not quite so sure that what equities have priced in right now, which is a perfect solution to all the macro events, is going to unfold. So they're still being selective in where they go. We're finding them rotate out of some of the names that have been in favor over the last couple of years in the AI space and moving more towards diversification into ETFs, outside of the U.S. They're diversifying into metals and energy.
Yeah.
We're seeing a big uptake in GLD. So retail is staying as engaged as ever. They're just being more selective about where they're doing it. And it's really interesting to see that.
Yeah, I think it's interesting. You and I talk a lot about this, about all of a sudden raw materials, basic commodities, which we kind of didn't talk about a lot, are now of interest in a good way. And that's continuing that trade, even though it feels like things are calming down, especially when it comes to the war.
But you look at copper, which was above $6. It's down to about $5.60 now. But we were looking at $3 copper 2 years ago. Silver was high, and silver would have been $40 before we printed 120, and we're down into the mid 80s. Metals are off their froth, but there's still a lot of interest, a lot of volatility, which our traders love to trade. They both love trading the underlying and getting exposure to high volatility products with the products that are out there. So they are looking for liquidity in the underlyings, the ability to manage them around the clock. Futures have seen a great uptake in our world, especially these smaller futures that they're rolling out now. Yeah. Customers are really engaging with that. They are, 10 years ago, you would have found retail more concerned about the exposure of 24/5. I was so many times I can't stay up all night and trade. And it's like, trust me, I've tried. It's not a good thing. Don't do it.
I mean, is volume that heavy? I mean, you're global, right?
We are.
So is trading that heavy in what we would consider the off hours?
Depending on the macro events that are going on, absolutely. What's so interesting, Carol? Sunday,
we're fighting because we want to both ask you questions.
Oh, Sunday at 5 o'clock your time, 4 o'clock mine in Chicago, futures markets open up.
Yeah.
And the amount of people, not only are our futures volumes up appreciably, the amount of people logging on to see where markets are is really fascinating. So people are incorporating that extra time and finding it valuable in terms of expressing opinion and managing exposure.
One thing that we want to talk to you about is this sort of meme stockification that we're kind of seeing right now. It's a little reminiscent of what happened in 2022. Allbirds, for example, yesterday, soaring more than 500% because it pivoting to AI. Concern around that? What does it tell you about the environment?
Honestly, our guys are, for our traders, there is not a listed options market on that. And it reminds me a little bit of the Wolf Speed move or some other, these odd things that take place. I mean, they have $50 million in a secured note. You look at CoreWeave, they've got $30 billion to spend over the next time frame. Is this really going to be impactful? I don't think so. You're going to see these outliers.
But does it say something about the environment? That an announcement like that gets that kind of perhaps retail interest?
I think it speaks to a little bit of the shiny toy. Is it lasting? I don't think so. So the uptake is interesting, but just looking back through where our traders are engaged, a few were involved, but not to the extent they're trading. We have a very active retail base that they're pulling away from other things to participate in something like that.
Peter, we've got to run. Please come back. And
absolutely.
We would love to have you back in studio and do even a deeper dive in terms of the conversation and stuff. Really great insight. Thank you. And thanks for listening.
Thank you so much, Carol. Tim.
Good to see you.
We'll think of you in the
much.
afternoons. Peter Mulmat, he is Tasty Trade head, joining us right here in our studio. We got to talk about Schwab because the stock is down, Tim, about 6.5%.
Yeah, this even as the company reported fourth quarter revenue that slightly missed estimates, even as the brokerage continued to attract the wealth of retail investors amid geopolitical uncertainty. We caught up just a short while ago with Rick Wurster, president and CEO of Schwab, who joined us from the company's headquarters in Westlake, Texas.
Talk to us about the quarter, because on several metrics, you guys definitely beat, and yet we do see the stock down on that revenue miss based on analyst estimates. How do you explain the miss, and what do you think investors might be missing here?
Well, it was an exceptional quarter. We had record results, record earnings, record revenue growth. We saw record new assets come into the firm in March, and it was across the board growth. Every one of our businesses grew double digits year over year. So it was a really strong quarter for the firm. It was also a quarter in which what we do, I think, really stood out for investors. We're a firm that stands behind every client, helps them get to where they want to be in their financial life, and in a market with more volatility, being in 400 local communities, having 16,000 advisors on our platform, taking 8 million calls, all of those things makes a difference in the everyday lives of people that invest at Schwab. It was also a quarter when we made a tremendous amount of progress around innovation. We launched teen accounts, sending a strong signal to teenagers and parents in our country about the power of saving, investing, and compounding. We made significant progress in AI. We announced earlier this morning that we are launching spot Bitcoin and Ether, and we'll do so in the coming weeks. We built out some of our lending capabilities specifically for the clients of our advisors, which are being well received, and we closed the Forge acquisition so that we can offer private shares to our Schwab clients. So it was a tremendous quarter. I'm thrilled with where we are. The stock goes up and down some days, and we don't know why. So we'll see what happens. But we're thrilled with how we're delivering for clients. Thrilled with how we're performing as a business.
Hey, Rick, on that record engagement, a 39% increase in daily average traders in March compared with a year earlier. What are you seeing from retail investors in April as markets do recoup these losses? Are you seeing the same level of activity in real time right now?
We are, actually. So trading levels have stayed roughly similar as we come into April. And our client behaviors, I've spent a lot of time with our clients over the past months, and what I've heard from them, all different cohorts of clients, are more trading-oriented clients are very active, but they're not taking the same bold bets that they might have been taking, say, a year ago. They're taking smaller positions. They're holding those positions for a shorter period of time because they don't have as strong a view on the direction of the market and some of the factors driving it. So they're taking smaller positions. Our longer-term oriented investors are staying the course. They've got a plan. We've helped work with them to build that financial plan, and they're sticking to it. And they've had really good resolve in terms of navigating the down moves here and sticking with stocks and benefiting from that over the long term. So I think clients are both engaged and acting very wisely.
So one of the things I want to ask you, and you mentioned the teen accounts, and I know we've had some other reporting out where you made some comments about younger investors. They'll come in and buy the dip. I mean, talk to us about those younger investors, whether it's the teen accounts, whether it's just younger in general, what kind of activity you're seeing on the platform. Is that where a lot of the growth in activity is?
Well, we're crushing it with the younger investor for a whole variety of reasons. You know, our teen account launch was about going into the homes of Americans, teenagers and parents, and being able to share a message about how to get started in your financial life. You know, you and I and us, we've been invested in markets. We've seen the power of what markets can do to your wealth over time. Not every American has participated in markets, and the ability to get to investors earlier and give them a positive message about owning stocks, owning bonds, being a participant in markets, I think is incredibly powerful. And it's really needed at this time because they're inundated on social media and other platforms with messages about, you know, come gamble on who's going to be, what Bad Bunny's going to play first. And that's really been the message that teenagers have been getting. And we're thrilled to get out ahead of that and offer a message about saving, investing, and compounding. Timeless messages that will serve them well for the rest of their life. And we couldn't be more proud to work with a lot of young investors who are thriving on our platform.
Well, that's a good segue to get into prediction markets because you used the word bet there and bet on pop culture. On today's earnings call, you said Schwab is taking a hard look at prediction markets, would stay away from allowing clients to place bets on sports or pop culture, given the firm's focus on building that long-term wealth. What is the timeline for this? Is it fair to say you're going to launch them this year?
Well, you know, we are closely following some of the developments from the CBOE and other participants that are using existing structures to come out with prediction markets, and they're treating them essentially as a binary option. And so if the CBOE were to come out with that, and I think they've publicly communicated they expect that sometime in the fall, that would be a very prudent way for us to be able to offer prediction capabilities to clients. They would be financially related around financial events and financial markets. They'd be in a structure that our clients understand, and that would probably be the prudent way for us to deliver it to clients. So we're closely following that and closely partnering with them, and we'll see where that goes. But Tim, you're exactly right. Our goal is to bring prediction markets to clients that are financially related, that where you, on average, are going to add to your wealth as opposed to gambling-oriented things, which are going to detract from your wealth.
All right. So, Rick, wait. So then could it happen by the end of this year?
Well, we'll see. I don't want it's. There's too much up in the air for me to commit to a date. I've been around too long to not lock myself in there. But I am proud that we said we'd have spot crypto out in the first half of this year, and we certainly look like that will be the case. So when we put out a date, we stick to it. I'm not going to put one out yet on prediction markets, largely because as we look at our priorities and the innovation that's coming, it's not top of mind for investors. And so as we think about what we're really leaning into, it's all the things I've talked about. It's getting crypto to market. It's having the opportunity to invest in private capabilities. It's having more lending capabilities. And it's meeting the full needs of our clients' wealth spectrum and being able to help them across their financial life. Our clients have a record amounts of wealth, and they need more help with that and more advice. And those are the things we're leaning into and building. Certainly, we'll offer prediction markets when it makes sense, and I know there's some clients that would appreciate that.
Hey, one of the things, though, Rick, we were curious about, our own Bloomberg Intelligence team has been doing some work on this, and they noted that around 88% of U.S.-based activity on prediction markets still sits squarely in sports markets. If you're not going to do prediction markets on sports or pop culture, some might say, why offer it at all? I mean, is there enough volume there, or is that why you're taking your time to see if there truly is enough volume?
Well, Carol, you hit the nail on the head. When I said, hey, there's not a lot of client interest in this, you can look at the volume in prediction markets. It's all sports gambling. And that's not something that's of interest to us. Fewer than 5% of people that put money into a sports gambling app take out more money than they put in. Our business for 50 plus years has been trying to help enrich our clients' financial life. And with stocks and bonds and ownership, it's all about owning a piece of the growth of our country and the companies in it. And sports gambling is fundamentally different than that. And that's why, again, as we think about prediction markets, I think it's likely something we'll have at some point, but it's not top of the list in terms of what we want to roll out, because there's just not a lot of volume outside of betting on sports and pop culture, which we're not interested in.
Hey, Rick, you announced Schwab Crypto. It's a spot cryptocurrency trading service. It'll begin rolling out to retail clients in the coming weeks, direct access to Bitcoin and Ethereum trading. Why did it take so long to do this? What were you waiting for?
I actually think we're getting Bitcoin and Ether out very quickly. If you look at the other major financial institutions, I think we're at the front of the line. We're doing this in a really thoughtful way, which is we're building the books and record capabilities ourselves. We're building the ability to custody the assets. That sets us up for the long run, which is the ability, if markets go towards tokenization, we're building the capabilities to support that. So we're making the investments we need to operate in a world that's more digital, should it go that way. And we're thrilled with our progress and got to market relatively quickly, I think, after the regulation changes, which allowed banks to get into these markets.
Well, Fidelity, Robinhood, Morgan Stanley, Coinbase, they've been doing this for quite some time. Coinbase has a decade-long head start. You manage $11.9 trillion in client assets. What is your competitive edge in crypto? And would you want like a Schwab client who has a Coinbase account to move their crypto assets to Schwab?
Well, Tim, if they've got a 10-year history, we've got a 40-year history ahead of them of building trust, of doing the right thing for clients, of being able to bring value, service, support, and advice together. And so what we offer that's differentiated is we're not just making a product available. We're making all of Schwab available, and crypto's now a part of that. And we have so many clients that I hear from all the time that say, I can't wait until you can offer this because I want to hold it on your platform. I trust you. You give me great advice. When I have a question, I call you, pick up the phone quickly. You can't get that on a lot of the other platforms. And in terms of your reference of them being out there earlier, the big difference with all those companies you listed is they don't have a bank. Mm-hmm. And as a bank, up until recently, we weren't able to have spot crypto for clients. And I think of the banks that have a bank, I think we're out there relatively quickly. So that's the difference on timing. But I do think we have a very competitive offer given all that we have to offer at Schwab. And we're doing it with great value as well.
I got to say, there was so much in the earnings call that really is playing into the narrative today, Rick. And we got to ask you about AI because, you know, back in February, there were some concerns. We saw wealth managers selling off yours along with Raymond James and LPL. And this came after Altruist came out with a tool that was going to help financial advisors personalize strategies for their clients. So You came on Bloomberg and you said you were disappointed and surprised by that sell-off, and you thought AI has the potential to make financial advisors more efficient than irrelevant. Today, you said you're planning to launch an AI-driven investment portfolio insights come May. What exactly will this be? And I've got to say, having been Tim and I at Schwab Impact, we heard it from the RIA community. Like, this is the kind of thing that they want, and they wanted it from you.
Absolutely. Well, AI is a huge accelerant to our strategy. It's going to help us grow faster, and it's going to help us drive scale and efficiency. On growth, we'll use LLMs. We'll treat them as a new distribution channel, which will allow us to reach a new set of clients. Much like we've worked with Google to open ourselves up to new clients, we'll work with the LLMs. We'll also be able to deepen relationships with clients we can't serve, which ties directly into your question. There's a group of clients that we don't engage in an individual personalized relationship with, and AI is going to allow us to reach them in a scalable way and provide insights, tailored views, and what's happening to their portfolio and their asset allocation that's going to add value to their financial life, and that's going to help us grow. And then on the scale and efficiency front, every single call that comes into a sales person or a service person, or when you walk into one of our branches, all of that is now being supported by AI. It's making our people more productive, more able to help the individual meet their financial dreams, and serve more of our clients. So we're thrilled with AI. I think it's going to be an accelerant to our business and drive both growth and scale and efficiency.
All right, our thanks to Rick Wurster, President and CEO of Schwab. We caught up with him a little bit earlier today, but obviously after earnings. Shares of Schwab, folks, they were on a tear last year, up about 35% year-to-date in 2025. And what we did see, though, in today's trade, a little bit of disappointment on the revenue miss, just down about 7% as we speak. And year-to-date, stock is down about 6%, so it's really off of today's trade.
Yeah, just a few headlines from that interview just now. He said some traders are taking smaller, shorter-term positions. The teen accounts that you asked about, Carol, he said they were launched to counter gambling messages. We then talked prediction markets. He said the company will offer prediction markets when it makes sense, but they're not at the top of the list.
Yeah, really, really great stuff. If you missed any of it, be sure to check it out on our podcast feed. You can also find it on our weekend show. That's on Saturday, and our podcast throughout the weekend.
All right. I'm looking forward to that.
I know you are.
Yeah. Hey, I'm also looking forward to hearing from Charlie Pellet. He's standing by in the Bloomberg Businessweek studio in New York with an update on the trade. Hey, Charlie.
Yeah, thank you very much. Has been a choppy session, but right now, looking at green on the screen, yes, gains for the Dow, the S&P, NASDAQ 100 index, and the advance today for both the S&P and the NASDAQ 100 index will be another record. Could see back-to-back records, in fact, on the S&P. Right now it's 7,031, up 0.1%. The Dow up 0.2. NASDAQ up by 0.2% as well. The 10-year, 4.30%. And West Texas Intermediate crude now higher by 3.4%, 94.37 a barrel. First day of trading from Madison Air Solutions. Company is up now by 18.8%. It is the biggest listing of a U.S. industrial firm in close to 3 decades. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar along with Tim Stenovec live here at Bloomberg headquarters in New York City. Well, we may have mentioned this before, but I got to say it bears worth repeating. It came from Bloomberg's Jessica Nix, who reported this out earlier this year, that more Americans are living with cancer as death rates continue to decline thanks to improved detection methods and better treatment options. And there's some stats around this.
Yeah, check this out. 7 of 10 people survive for 5 years after a diagnosis. That was between 2015 and 2021 across all cancers. It's a key goal of therapy. That's according to the American Cancer Society's annual report. Carol, this improvement extended to more aggressive types with higher survival rates for myeloma, liver and lung cancers compared with decades prior, according to the report. So some good news.
Yeah, some good news, right? This is what we want to be hearing. Hey, let's get to our Business Week Women's Health segment. We focus on key issues and developing technologies impacting the present and future of women's health around the world. Because as we've been talking about over the last year or so, there are gaps between men and women when it comes to healthcare and diagnosis. Joining us from Boston is Dr. Bea Bakshi. She is co-founder and CEO of See the Signs, and she joins us. So great, Dr. Bakshi, to have you here with Tim and myself. Tell us about your backstory, because being a junior doctor in the emergency room and seeing a certain patient and how that kind of got you to where you are today and why we're having this conversation.
Yeah, absolutely. And thanks so much for having me today. So cancer is something that I think touches all of us, from either experiencing personally as like a family member, a friend or colleague. We've all kind of experienced the loss of cancer. And as a junior doctor, and then later when I specialized in primary care, I treated and cared for a lot of patients who had a cancer diagnosis. And sadly, more often than not, I saw patients actually die prematurely from a cancer diagnosis. And it just happened to be a really light bulb moment for me quite early on in my career, was when I was doing a shift in the emergency room. And I had a patient who had come in where they had seen their own provider over the course of 6 months with accelerating symptoms. And it was one of the things that they kept going back and kept being reassured. They did have some tests, they were put on some treatment, but at the same time, their symptoms were getting worse and they ended up in the ER, which is when I met them. And it was a really sad story where I spent the night with this one patient, and it transpired that he had pancreatic cancer and it had just spread everywhere. And it was in giving this news to him that I was surprised and taken back from his reaction, where he never really had an issue with the cancer, but kind of threw back to me is that, as a patient, I had done all the right things. I'd gone back to get care. I was worried things were getting worse. I kept going back to see my doctor, but the system failed me. And it wasn't really the fact that he had cancer, but why was the cancer diagnosed so late?
Yeah.
And what we know when it comes to late cancer diagnosis, it's really the difference between life or death for many patients, where an early stage detection, for example, in bowel cancer, over 90% of patients survive 10 years or more from bowel cancer, compared to less than 10% who are diagnosed in the very late stages. So in doing so and kind of seeing this experience really firsthand, it really made me reflect to say, well, how are patients diagnosed with cancer? And what more can we do as both a health system, as doctors, and as a society to move diagnosis upstream so we can capture patients and all patients earlier in their diagnostic journey?
There are so many elements to this. It has to do with coverage, health insurance, technology, support or lack thereof when it comes to research. And those are the tensions that I want to talk about. And I'm just curious, given how fast technology is moving, but also at the same time seeing funding pulled by the federal government here in the United States for a lot of research, does it leave us in a place that the technology can make up for that lack of funding? Are you still optimistic about things moving forward?
So what we're really excited about at See the Signs is we're using artificial intelligence and analyzing electronic health record data to predict if someone is at risk of cancer. So if you think about how traditionally over the last 20, 30, 50 years we've approached cancer, we've been really just testing people to try and see how we can find cancer. And many screening programs, as you'll know, are quite invasive, especially the ones for women when it comes to breast screening or cervical screening. And that's the first entry point in, where patients generally feel well, but we test them to try and find the cancer early. We've never had more of a precise or personalized way to do it. And what See the Signs has been working on, we're really excited about all the success we've had in the UK's National Health Service, is we've been able to accurately predict when a patient is at risk of cancer purely through looking at their data that sits in their electronic health record and collecting data directly from patients. So you can imagine, from the idea of having to test people in an invasive way every 1, 2, or 3 years, compared to having a software that runs continuously in the background of your electronic health record and can help flag when you're now at risk of cancer and get you into the right care you need and make sure you undergo the right tests and investigations. So we're really excited about the power AI has when it comes to early cancer diagnosis. And in the UK, we've assessed over 500,000 patients through this method and helped to detect 75,000 patients with cancer across over 100 different cancer types purely through this approach. And like for like, you talked about coverage and you talked about health insurance. You can imagine taking an AI-based approach is significantly cheaper than if we had to scan everyone in the population or test everyone in the population. So one of the things that we really are excited about is AI to be able to deliver early cancer detection, but in democratizing access and reaching those patients in those rural geographies, but also really thinking about how we can bring costs down substantially. So cancer and cancer care is one of the most expensive cost drivers we have, both for CMS, but also for commercial payers.
Dr. Bakshi, just have about 2 minutes. I would love to talk so much about this. Where's the choke point in getting this actually done? Because I think about, there's a whole massive business in treating people with cancer. But if we could get it earlier detected, it would certainly impact that business. And I think most would think that that's a good thing because early detection can lead to much, much better outcomes. But I'm just curious. So what's the sticking point here? I mean, is the data there that this actually is effective, works? You catch it earlier for people and this just makes sense, or what's holding it back?
Yeah, absolutely. So we have demonstrated a 36% stage shift from moving it from stage 3, stage 4 to stages 1 and 2, where it's localized and treatable. We've also seen a 99% sensitivity for cancer, so capturing all patients with cancer in the population. But more importantly, when you say around the chokehold, I think up until now, a lot of the investment has been in late stage treatment. So we spend about 150 billion on late stage treatment. So that's a huge cost savings we can have if we can reduce the burden of that and move diagnosis upstream to early detection. But the other benefit, and I'll mention this now because I'm speaking to Bloomberg, is purely on thinking about the working age population. Cancer is the leading cause of premature death across all age groups. Those are people being taken out of the workforce, taken out of employment. These are taxpayers that are taken out. So there's not only just the benefit to patients, but it's the economic benefit to society and helping patients live longer with cancer.
Yeah, I mean, there's so much. Come back soon. Love to hear how this thing is progressing because I think you are preparing, as you've said, or I'm looking at our notes, to bring this, See the Signs, to the United States. So curious about how this is going to progress. We got to run. Dr.
Absolutely. Thanks so much.
Yeah, come back. Dr. Bea Bakshi, she's co-founder and CEO of See the Signs, joining us right here. Having seen family members with cancer, early detection is a make or break.
I mean, it's
often.
It's omnipresent in our lives. Truly. That's what it is.
It's the big, I think, healthcare nut that is, you know how to treat it, but tough to crack. Hey, stick around and check on trading and stocks on the move.